Hello everyone. In this particular homework exercises, we're going to go through Chapter 2 concepts. Once again, Chapter 2 is pretty much a continuation of Chapter 1 in regard to the fact that we're just laying out a macro view of governmental accounting. In this first homework example, what we're going to do is basically you see the name of the fund over there on the left-hand side, and you got to put it into one of the three fund categories. Instead of going through this step by step, let me just kind of explain the three fund categories. The first category, governmental funds. The governmental funds are to account for the general government activities of the particular entity. Police services, fire services, parks and recreation, city hall operations, and the like. Your second category, proprietary funds, they are to account for the business type activities of the government. And they basically are going to account for activities where there is an additional user fee that's above and beyond property taxes to really cover those voluntary services. Examples would be a golf course, a toll road, things like that, maybe a water utility. And then last but not least, we have fiduciary funds. Fiduciary funds are to account for the government's responsibility for managing other people's or other entities' assets. Those are the three fund categories. The first category, governmental funds, they're going to consist of number one, general fund. That's really the default fund. Number two, special revenue fund. That is when we ever have monies that are restricted or committed in any way, we can set up a separate fund for that. Three, capital projects fund. That's when we have a large general government construction project, like we're building a new police station or a new fire station, a new park, a new city hall. Number four, debt service fund. That's when we're paying back long-term principal and interest on general government debt. And then lastly, a permanent fund, basically where we have contributions and the donor expects that the donation to never be spent, effectively be permanently invested and use the investment earnings for a particular purpose. Those are the governmental funds. The proprietary funds, on the other hand, are enterprise funds and internal service funds. Enterprise funds is where the government provides a service, a voluntary service, to the residents of the community for an additional user fee. Example, water utilities, bus system, subway system, toll road, toll bridge, golf course, and the like. And then you have an internal service fund. If you think of the name, internal service, this is when one government department services other government departments. Example, maybe a mechanic shop, maybe a printing shop, maybe a supplies department, maybe an IT department, an insurance department. And then lastly, we have our fiduciary funds. Two types of fiduciary funds. We have custodial funds and trust funds. The custodial funds is basically a pass-through, is where the government collects money on behalf of somebody else and then passes it right through along to them. And then trust funds is more of a long-term nature. Trust funds is where the government has a responsibility for managing other assets for somebody else. There are pension trust funds, investment trust funds, and we're also going to see private purpose trust funds. I'm going to come back to number 17 in a minute, but let me go to 18 really quick. 18 was where we had some, pretty much in line with what we were just talking about. And so you can see the wording on the left to match it up with the actual fund on the right. Very similar to what we talked about. Letter A, construction of public buildings. Keyword there being public, where there is a construction going on of general government assets. So you're going to use a capital projects fund for that. Letter B, cost of a central function, purchasing or warehousing. That's one government department servicing others. That's an internal service fund. Letter C, gifts in which the principal must be invested and preserved, while the investment earnings must be used to provide scholarships to children of police officers who died in the line of duty. Now, when you read this, I would imagine most people would think this is a very nice thing to do. However, I hate to sound cold, this is not a use of taxpayer money. So this is something if the city wants to do, they need to do it in a private purpose trust fund, which really is not taxpayers' money, but it's private money that's given to the government to manage for this purpose. Now, let's go down to F for a moment, because C and F are similar. They start similar, but they differ how they finish. So let's read F. Gifts in which the principal must be invested and preserved, but the investment earnings can be used for public purposes. So once again, this is a gift that's received to the government. However, the investment earnings can be used for public purposes. That word public means general government purposes. Well, in that case, we have a permanent fund. The principal itself must be preserved, which means it must be permanent. We can't spend it. But the investment earnings we can use for the public purpose. That's permanent. All right, let's go back up to D, administrative expenses for the city manager's office. Well, that's as general as it gets, general fund. Letter E, assets held for external government participants in the government's investment pool for the purpose of earning investment income. This is when a bunch of governments get together and they pool their money. And so when we have a trust fund, we're actually the ones managing the investments for other external governments. We would account for that in a fiduciary fund, specifically an investment trust fund. Letter G, costs of operating a municipal swimming pool. In this municipal swimming pool, the residents of the community need to pay an entrance fee to use the pool. That is not covered with property taxes. That would be an enterprise fund. Letter H, taxes collected on behalf of another government unit. And that money that's collected by us, we're collecting it on behalf of somebody else. So let's take a look at the example where we have a county tax collector. They're collecting all the taxes for all the governments within the physical boundaries of the county. Well, the county tax collector is going to take all those checks. They can't keep it. They need to turn around and distribute it where it needs to go. The school district, the different municipalities, and the like. That would be an example of a custodial fund. We just have custody of the asset really quickly. Letter I, assets held in trust to provide retirement benefits for municipal workers. Well, they're going to keep that long-term and manage it. That is a pension trust fund. Letter J, principal and interest payments on general long-term debt. That is a debt service fund. And lastly, grant revenues restricted for particular operating purposes. Special revenue fund. Once again, special revenue funds are set aside for any monies that are restricted or committed. And I'll be explaining restricted and committed in a little bit. All right, so this is a nice little example. Explains the different types of funds and where the monies will go. Let me just reiterate A and J for a second. A, construction of public buildings. Now the key word here is public. We can construct, let me say we can construct a new toll bridge, a new toll road. Well, toll roads belong as an enterprise activity, so the construction of that would go in the enterprise fund. So construction only of public or general government would use a capital projects fund. Not all construction would flow through a capital projects fund. It has to be public in nature or general government. If it has an enterprise activity, they're going to account for their own construction. Same thing with debt service. The key word here is general or public debt. If it's debt on building that toll road, in my example, that would simply flow through the enterprise fund. So not all debt flows through the debt service fund, only the general debt does. All right, let me back up and we'll go through question 17. With question 17, you can see we have A through K. We have some characteristics here. And so we're going to say, okay, which fund or which government-wide statement is going to follow these particular characteristics. All right, first, A, operational accountability. This term, operational accountability, I need you to think about that as accrual accounting. And so of all the funds that we've learned, governmental funds use modified accrual. That is why B is checked off for modified for governmental funds. But everything else, the proprietary funds, the fiduciary funds, and the government-wide statements all use accrual accounting. So we're going to check off A on any fund or government-wide statement that uses accrual. Letter C, custodial fund. That is a fiduciary fund. That's why we have C checked off. Letter D, statement of cash flows. That is only prepared for proprietary funds. So we have D checked off here. E, fiscal accountability. Fiscal accountability is the opposite of operational accountability. Just like I told you to match up operational accountability with accrual accounting, I'm going to tell you to match up fiscal accountability with modified accrual accounting. So we have governmental funds checked off here. The difference is this. With modified accrual, we're only interested in the current year cash flow, hence the term fiscal, right? The 1 year accountability. We're only interested in the 1 year. Operational accrual accounting, as you know, is interested in the entire economic resources, even if it's long term. Letter F, a debt service fund. Well, that's in the governmental fund category, right? Letter G, current and non-current assets and liabilities. That's full-on accrual accounting. What we're going to see is with modified accrual, we're only accounting for current assets and current liabilities. But with accrual, as you've learned in all your other accounting classes, you're interested in both current and non-current. Letter H, internal service fund. Internal service fund is a proprietary fund, so we've got that checked off. Now, the internal service fund is going to be prepared, yes, as a proprietary fund, but internal service is either going to be in the governmental activities column or the business type activities column. It's not a typo, even though they're both checked off here. So just as a little summary here, governmental funds, they're prepared on a standalone basis, but then they are also then reconciled to accrual accounting for the governmental activities column, as I'm circling down here on the government-wide statements. The enterprise funds, that's a proprietary fund, and when that gets consolidated up to the government-wide statements, it's going to go into this category, the business type activities column on the government-wide statements. The only fund that can go in either category is the internal service fund. If the internal service fund primarily services general government departments, it's going to go into the governmental activities column on the government-wide statements. If not, it's going to go in the business type activities column. Next, integrated budgetary accounts. And we're going to study this in the next chapter. What this means is that a budget is passed and it's actually recorded. There is a budgetary journal entry that is recorded for governmental funds. Next, revenues and expenses. These are terms for good old accrual accounting in the proprietary funds, as well as the government-wide statements. The fiduciary funds, they don't use the terms revenues and expenses. The fiduciary funds, we're going to use the term additions and deductions. And think about the reasoning. The reasoning is these assets that we're managing don't belong to the government. So it's really not a great idea to use the term revenues or our expenses. It's really not. So we're going to use the terms additions and deductions for fiduciary funds. So once again, we're going through some macro chapters here, just trying to give you the lay of the land here and what these financial statements look like. and all the terms and the different funds. All right, question 19. This question deals with equity for governmental funds. Okay, the equity for governmental funds, as a refresher, is called fund balance. There are 5 categories of fund balance. Those 5 categories are as follows. Number 1, non-spendable. Number 2, restricted. Number 3, committed. Number 4, assigned. And number 5, unassigned. Really quickly, and then we can go through these 10 examples. Number 1, non-spendable. This is when we have a current asset that is not in liquid form. We want a corresponding asset in non-spendable fund balance. Number 2, restricted. This is when a third party or some law dictates how we can spend those funds. The third category, committed. This is when the governing board, this would be the elected officials, the mayor and the commissioners, when the elected board makes a decision what to do with certain funds. We would set that aside as committed fund balance. Number 4, assigned. Assigned is when a management member, not the governing board, but a management member, maybe the city manager, maybe the finance director, maybe the police chief, the fire chief, some management member has been delegated the authority to set aside funds for a particular project. That would be considered assigned. And then last but not least, unassigned. So with those definitions, let's go through this. Number 1, at year end, a special revenue fund has a $50,000 fund balance on which there are no constraints. Well, no constraints, most of you probably would have jumped to the conclusion that's unassigned, but the answer is it's assigned. And the reason for that is this. The fact that the money is already set aside in a special revenue fund, that fact alone, that we put $50,000 into this special revenue fund, even though there are no constraints, because it is set aside, somebody, some management member made a decision on that money. It's assigned. Number 2, Allentown has a $1 million emergency reserve fund it's set aside. According to the town ordinance, funds can only be used from this fund with approval of 2/3 of the governing body, which is the town council. So this is the governing body, the elected voting members, officials. That's committed. Number 3, Allentown determined the general fund has $22,000 in inventory. It should report on its fund financial statements. Well, that inventory is not a liquid asset, so we're going to have a corresponding amount in non-spendable fund balance. Number 4, Allentown issued bonds that sold at a premium. Using the authority allowed her by the town council, the city manager made the decision to set aside the $100,000 premium to pay the principal on the debt when it comes due in a future period. The city manager is the CEO of the city. That is a management member. They were given the authority to make a decision on these funds. That's assigned. Number 5, the federal government has provided a grant for emergency housing assistance that can only be used for low-income families. Allentown determined $250,000 of the grant funds remained at year end. Well, the federal government is a third party. We're the city. The federal government is a different entity. That third party is dictating how we can spend this money. That's restricted. Number 6, Allentown had a balance in its prepaid insurance account at the end of the year. This is very similar to number 3 when we had inventory at the end of the year. This is a non-liquid asset at the end of the year. Therefore, we're going to have a corresponding amount in non-spendable fund balance. Number 7, at the end of the period, Allentown's general fund statement of revenues, expenditures, and changes in fund balance reported a change in fund balance of $154,000 and change. Well, all of the operating increase, in this case the change in fund balance, initially it's going to go to unassigned. And then once it goes to unassigned, we can start to reclass it. So that is initially going to default to unassigned. Number 8, Allentown's mayor indicating that he was setting aside $25,000 of funds for future purpose of land for a town park. Well, that the mayor, not the governing board together and voting together as a group, but the mayor, they're acting as a management member in this case, making the decision by himself or herself, right? Actually, it's a him. That's assigned. Very similar to number 4. Number 9, the Allentown Council passed an ordinance requiring that 5% of the town's sales tax revenue be set aside for economic development. Okay, so the voting council members, the voting elected officials, all right, they are determining what to do with this money. That is called committed. And last but not least, number 10, Capital Projects Fund ended the period with a negative fund balance. Well, any governmental fund that has a negative balance, unassigned. All right, so that's a good exercise dealing with our 5 categories of fund balance. And the last topic here in Chapter 2 is dealing with this concept of major funds and non-major funds. All right, let me explain what is going on here. Major fund. What is a major fund? Basically, what a major fund is, it's any governmental or enterprise fund that gets their own column on the fund financial statements. And we need to meet certain mathematical criteria to be considered a major fund. If it does not meet the mathematical criteria, what we're going to do in the face of the fund financial statement is we're going to take all these funds that do not meet the mathematical criteria. They're going to be called non-major funds. And the non-major funds are going to be consolidated or combined into one column on the fund financial statements. They will be broken out into different categories later in the CAFR, but on the first page, they're going to be combined into one column, the non-major funds. All right, here's the math test. What you're going to do is this. You are going to take the governmental funds, and you can see they're in bold, the governmental funds and the enterprise funds. You're going to list them all out. So this particular city, Palm City, the governmental funds are General Fund, Health and Human Service Fund, most likely a Special Revenue Fund, Community Development Fund, which might be a Capital Projects Fund, I'm not sure, and then a Debt Service Fund. The enterprise funds, we have 3 of them, the Utility Fund, the Airport, and the Golf Course. And what you're going to do is you're going to list out their total assets. So here are the total assets, in millions, of course, or in thousands. Total liabilities, total expenditures / expenditures. The governmental funds, they're called expenditures. The enterprise fund, they're called expenses. And then lastly, the revenues. And what we're going to do is we're going to do a 10% test and a 5% test. Now, what is this 10% and 5% test? Okay, so what we're going to do is this. I'm going to show you this table down here. So here are the governmental funds, the assets. Okay, highlighting it here so you can see it. These are straight from the table. These are the asset values for all the governmental funds. If I add those 4 numbers up, it comes to 864.2. I'm going to take 10% of that. It's going to be 86.42. Okay? Now, each of these funds needs to be at least 10% to meet the 10% test. The general fund, you can see that there's nothing here in this MET category because by default, the general fund is always major, so we don't even need to do it. So Health and Human Services Fund, 10% of the assets of governmental funds is 86.42. Is that 110.7 greater than the 86.42? It is. So we're going to put a Y for yes. How about the next one? 220.5. Is that greater than the 10% of total governmental funds? It is. So we're going to put a Y there. How about the debt service fund? 70.8. Is that greater than the 86.42? No. So I'm going to put an N there. Now the enterprise funds. Same thing. Here are all the assets. 3 enterprise funds. Totals 6107.8. 10% of that, 610.78. All right, and you're going to go through each one. Is this asset greater than the 610.8? It is. Is the next one greater than 610.8? It is. Yes. Is the next one greater than 610.8? No, it's not. N. And then lastly, 5% test. So I'm going to take the total governmental funds of 864.2 and the total, I'm sorry, that's total governmental funds, total enterprise funds of 6107.8. Add those two up and then take 5% of it. 5% of the grand total is this number here, 348.6. Now I'm going to prepare for the 5% test. I'm going to see if the total assets are greater than the 348.6. Is this greater than 348.6? No, so I'm going to put an N there. How about the 220? No, it's not. 70.8? No, it's not. 639.4? Yes, it is. 5419.5? Yes, it is. 48.9? No, it is not. So what I just walked through with you with the assets, a 10% test and a 5% test, you're going to do the same thing with liabilities. You're going to do a 10% test on each category, the governmental fund category and the enterprise fund category, and then you're going to do a 5% grand total test. And as long as a fund has YY at least once, meaning it doesn't have to be assets and liabilities and expenditures and revenues, just has to need to be once. So YY next to utility fund. That's a major fund. Here's a YY in the city airport fund. That's a major fund. Do I see any other YYs? Well, here's another one. Well, that's the same airport fund. How about up here? Oh, here's a YY. Okay. And the expenditures test looks like the debt service fund met it, as well as the revenues. So I have four major funds. The general fund is major because by default it's major. The debt service fund is major because of these two tests here. The expenditure test and the revenue test. The utility fund is major because of the asset test, the expenditure test, as well as the revenue test. And the city airport fund is major because it met the 10 and the 5% test across the board. And so what this means, once again, and we'll put the yeses and nos in here, meeting the 10% and 5% test. If it meets the criteria, the 10 and 5% test, to be a major fund, they're going to get their own column when we prepare the fund financial statements. If not, it's going to get combined with all the other non-major governmental funds, non-major funds, whether it's governmental or enterprise.